Hello, my name's Gary Stogan. I'd just like to welcome Chris Breward, who is a chartered financial planner. Morning, Chris.
Well,
And this morning we're going to talk about pensions and what employers need to know with regards to legislation changes. So, Chris, I've heard that there's legislation changes coming up. What are they and how they're going to affect me as an employer?
the government has announced that from 2012 they would like all employees to be auto-enrolled into a pension scheme. In 2001 they launched stakeholder pensions, which required any employer with 5 or more employees to have a scheme set up which employees could join. The take-up rate on that has been extremely poor, so now the government 10 years later has said to resolve the problem of not enough people saving for their retirement, they want everybody auto-enrolled into a pension scheme, and that will either be a scheme that they set up which is called Nest, or into a qualifying employer-based pension scheme that obviously the employee will have set up themselves.
So, no matter how small or large we are, we're going to have one of these schemes. So even if we have one employee who's part time, we would still need to have one of these schemes.
There is restrictions for low earners and people of certain age groups who don't have to be auto-enrolled, but the basic principle is that yes, every employer, even the most smallest of employers who employs at least one member of staff, will have to auto-enroll their employees into this scheme.
Okay, so you mentioned 2012 there. I guess that if we're going to have this, we should be doing something about it now.
In 2012, the government will start implementing this, but it will be the largest employers who will be affected at that time. I would anticipate that employers who have, say, 50 members of staff or less will have to auto-enroll their members of staff into this scheme from 2014 onwards.
I have two options. You mentioned those earlier. One was the government one, Nest. So can you tell us a little bit more about that one?
Yes, Nest is going to be a government sponsored pension scheme that will be set up whereby an employer deducts contributions from an employee's salary, pays it across to Nest, and that those contributions are then invested on the employee's behalf until they reach their normal retirement date. The contribution levels will be in 2014 it'll be 1% paid by the employer, rising to 3% by 2017, and by 2017 the employee will have to pay 4% of their salary, plus there'll be government tax relief on those contributions. So by 2017 a total of 8% of an employee's salary will be paid into this scheme.
So 8%, but as an employer, you would be expecting us to pay 3%. Is that right?
That's right. Yes.
And we wouldn't have any way of getting out of that, even if we went to a personal scheme.
No, the employee does have the option of opting themselves out of this scheme once they've been opted in. However, it will be against the law for an employer to actually tell an employee that they are eligible to opt out.
Okay. So if we decide to run our own scheme, can you tell us a little bit more about that?
Yes, an individual scheme which will be set up for your company or your business would offer you greater levels of flexibility. It would allow you to pay much larger contributions in, perhaps if you wish to reward a key member of staff. At this moment in time you're able to pay up to 100% of an employee's earnings into a pension scheme, so you have much greater flexibility. From the employee's point of view, they have a scheme which can be tailored to them in the sense that it can be invested wherever they choose, and that can be changed and altered throughout their lifetime. The government scheme, because it'll be a one-for-all type scheme, will have a much restricted investment choice for them. It will, however, have lower charges, which many people will see as a benefit, but you're going to get lower charges but much lower flexibility in choice.
So can we actually pay additional contributions in the government scheme?
No, that won't be possible. Anything above what you have to pay as a minimum would have to be paid into an employee's own personal pension arrangement.
Okay. So our own scheme, what would be the costs involved if we decided to run our own scheme?
Well, obviously you've got the ongoing contributions which would have to be paid, but at the outset there would be advice charges required to set the scheme up. Going forward, it would be expected, or it would be good practice, that the scheme should be reviewed, and therefore there'll be an advice charge in there going forward. Now those costs can be totally taken on board by the employer, they can be taken on by the employee, or they can be split between the two. So it is very flexible in that respect.
Okay, so how we'll go about setting one of our schemes up?
You would seek advice from a pensions advisor who would come in, discuss this with you, ascertain what your needs are, and then make a recommendation of what type of scheme would be appropriate for you and your members of staff. Again, it would depend on the size of the business, the contributions that you wish to pay, what type of scheme would be most suitable for you.
Okay, that's great. Was there anything else you would like to add?
Just a lot of people believe that this may not happen, it's something that will be put off. I don't believe that's the case. There's lots of press articles and issues on the news quite regularly now saying that the government is pressing ahead with this because they do realise that we have an ageing population and we're not saving enough for our retirement. So all businesses need to be aware that in the next few years there will be an extra charge on their turnover in the form of compulsory pension contributions that will have to be paid for employees who want to join the scheme.
Okay, that's great. Thank you very much, Chris.